Hi guys, welcome back to the channel. It's Ryan and Degenerate Passive Income coming to you every Tuesday night at 7 p.m. Central Standard Time with my good friend AJ. It's our date night every Tuesday night. We talk about DeFi, we talk about Bernard bonds, we talk about DexFi, EarnFi, Honor versus Madness, everything more focused on Bernard bonds, guys, and Treasury bonds and DexFi, because we all know it's kind of the same thing. We're just a white label group for the Bernard bonds, but we talk about everything. So if you guys have any questions on anything, please ask them in the chat. This is what it's for. Don't be shy. DM me personally. I have my Telegram open here, and I will ask, and you can be anonymous. Not a big deal. So with that said, let's get started. AJ, we've got ETH booming, up over 8% since last AMA last Tuesday. I'm pumped about that. A little over 2,600 bucks. Maybe the bull is starting. Maybe it's just kind of going sideways. And it looks like our current TVL is over 300,000. So, I mean, we're looking good. Like more bonds are being bought every day. I mean, what's the sentiment, AJ?
Yeah, Ryan, no doubt, bro. Again, I love our Tuesday night DeFi date night, and yeah, man. I mean, I'm as bullish as ever, bro. This is all coming together. I know we had a really bullish AMA last week, and that's with ETH being down. Now we saw a little bit of a recovery, and overall, I mean, that just means that principal balances are up, dollar values are up, and yield is up. I mean, even though we see some price appreciation. This is all happening while overall volume has been down. So again, we earn our fees from the volume. So to still be able to, have a decent APR and the underlying assets moving up in price is exactly what we like to see. So yeah, now back over 300K in current value. Our original treasury bonds are up over 1.4 million now. So we're closing in on over almost 2 million in total TVL under bonds. And that's important because, again, the more TVL, the more fees, the more everybody gets paid back from the original issues. And ultimately, the more we're able to earn in the long run. And, our top up or epoch rollover is on Fridays. So today is actually, Tuesdays and Wednesdays are probably some of the lower APR days, and we're still, over 80%. So that's really, really bullish. Again, keeping up with, that 80 to 120% APR, even upwards of 150% APR when, we see the bull run really finally kick in. So I'm still a big believer that that is going to happen. July is usually a really bullish month for crypto, and then we see the real alt season, top out later in the year. So I think we're still right on track for all of that for sure.
Yeah, and let's talk about that APR real quick. We're at 88.97. That's about, quick math, that's about 7.5% a month. Obviously, that fluctuates. We've seen as low as like 85, I think, and as high as 130 when it started or whatever.
For
What,
sure.
what, what makes that variable? Is it does it have anything to do with TVL? Is it is it how the fund's doing? What is that number?
Yeah, for sure. So there's a multitude of factors that go into the overall APR, but the biggest factor is volume. So what we're doing, what Bernard bonds are, and what's happening under the hood is we're doing what's called concentrated liquidity providing. And so all these decentralized exchanges, they have to have liquidity to facilitate trade. So again, if nobody put up their Bitcoin or Ethereum to trade, then nobody would be able to trade. So what we're doing is we're essentially providing that liquidity in a decentralized manner, and then we earn part of the fees that are generated through the DEX. And depending on our range, again, not to get too complicated, but we're also able to set a threshold of what price we're willing to trade the assets at. And the secret sauce is getting that range as tight as possible, but not going too tight that we fall out of the range. And this is what DexFi has been built on. It's over 3 years of development. All the secret sauce of being able to manually or automatically manage those ranges in the different vaults, and do it in a way that is scalable. So yeah, there you go. There's a great representation of the ranges. The gray bars are the top and bottom range, and that white line is the price. So the goal is to keep those two gray bars as tight as possible, but don't let that white line go out of the gray bars. So and again, by doing so, you know, some of these LPs, they're doing millions of dollars a day in volume, and so we're earning say 0.03% of all those trades back and forth. That's how we earn. So we're earning real yield. We're earning the tokens themselves. So again, if we're providing LP for again say Bitcoin Ethereum pair, we're earning both more Bitcoin and more Ethereum because we're taking fees from that. Then our protocol automatically converts that to USDC. That locks in the gains, and so you're getting paid in USDC, locked in, again, locking in the value so you're not exposed to more volatility, but your underlying asset is exposed to Ethereum. So, last week, dollar value and ETH value was a little bit down, but this week we're up, about 10%, and the fund has, been performing right along with that. So you're getting yield from fees, real yield from fees, and you're getting the exposure to the underlying assets going up as well. And again, this is all while volume has been down. I mean, based on when we first started about 3 weeks ago, we were doing about double the amount of volume that we are right now. And that's just because markets are still, yeah, you can see here, there's been a dip. We're starting to come back up again now a little bit, but volume again is the key. So, with tariffs and geopolitical issues, we saw some some hesitation in the market, and that obviously is less volume, and when price goes down. But when there is excitement back, which we're even seeing over the last 48 hours, price and volume go up, which means we're making more in fees and our principal balance is up. So it definitely goes both ways.
Yeah, exactly. And while we're talking about this too, as well, these positions, as you can see, guys, I have, these are my positions. About 45 days ago, I think it was, I put in $500, $100 in each of these pools, and anybody can do this, guys. Like if you don't think Bernard Bonds is for you and you want to try this on your own and do the research on the tokens and do, connect your wallet, go get yourself some ETH on base, and you can deposit into any of these vaults, whatever you choose. The only reason why I did this was just for content and to see how it would work. And so far, I've made, what is it? Profit is $60.23. So about a buck 10 a day I make on $500. So about 0.5% a day, I suppose you could say. I mean, there's nothing wrong with that. I mean, 0.5% a day, that's killer money. I haven't claimed any for some reason. I don't know why. I'm just going to let that build until I have enough to buy a bond, maybe, because like I said, the only reason why I did this, guys, is for the content and just to see how it worked, to see if it was very easy. And it is very easy, to be honest. And you can connect your wallet. Anybody can go do this. The reason why I did it, like I said, was for content. I want something that I just want to Ronco food dehydrator, set it and forget it. I don't want to think about it. That's why I'm a Bernard Bonds fan, because I just deposit my ETH on base and watch the APR go, fluctuate a little bit. 7% a month, 6% a month, 10, 12, whatever it is more what you're getting, I mean, in 5 years at your bank, in a month. So, I mean, this is what I'm trying to get across to people, that this stuff is out there. And like AJ has said before, it is real yield. Like this money this money, this USDC 5369 that's in my wallet right now. I haven't claimed this either. I don't know why I haven't done that, but I just let it build. I've got 4 bonds. This USDC just doesn't magically drop into your wallet. Well, it does, but you know, it slows down throughout the day, throughout the night, because the yield isn't produced. There's no timer saying, okay, this wallet needs this much, because you know, that would be Ponzi-nomics, guys. The only time USDC drops your wallet is when fees are being generated and there is a profit. Is there that's am I saying that correctly, AJ?
Yeah, Ryan, you made some really great points, brother. So, yeah, to begin with, again, you know, the underlying technology is the vaults. And like Ryan said, anybody can go and do it on their own. But there is a level of knowledge and, you know, basically paying attention to make sure, you know, we've automated it as much as we can, but the vaults themselves are still a little overwhelming. The bonds utilize the vaults, but with our expertise. So now, like Fred said, it really is a set and forget it. You mint a bond, that capital is deployed into the contrary liquidity pools based on our expertise. So again, you get, you know, our 20 years plus combined experience in crypto between myself and Jake, Dex CEO, and we are looking for different best entries. We know what LPs are paying the most. We know the best liquidity ratio to volume. So again, you know, $1 million of liquidity, but $10 million a day in volume. That is a really good pool to be in. So we look at different metrics to see, and yeah, you get that USDC in your wallet every second of every day based on the yield. So to Ryan's point, you know, this is zero Ponzonomics. We don't have, you know, the yield can fluctuate. It can be, you know, 88% APO today. It could be, you know, 150 tomorrow and back down to, you know, 70 the next day. So again, the APR is variable. The mint price is variable. Everything is variable. But why that is so bullish is that we're not guaranteeing anything. And that's where a lot of other protocols get into a ton of trouble, is they guarantee a daily or weekly or monthly percentage. And if they can't meet that liability, then they use new users' funds to pay out yield. And then, you know, the house of cards comes crumbling down. And the amazing part about all this is, you know, we've been around the block. We know how these protocols operate, and we made a commitment to everybody that we weren't going to do that. And so you can click right there, Ryan, on the fund value link, and you see every single piece of down to the penny of where the money is, where the money goes, you know, what payouts are being made, what pools and LPs were in. Literally, it pulls up the DBank account, and you don't even have to take my word or Ryan's word. This is all, you know, independently displayed on chain. It's impossible to, you know, fudge any numbers. So that we're the only protocol, to my knowledge, that shows this, and we're the only protocol that's really able to do this. Even if other protocols have good intentions, but don't want to share for security purposes, I understand that to a certain extent. But 9 times out of 10, it's because they just don't want to show, you know, what's really happening behind the scenes. And we can, because we have the proprietary tech with our vaults that we're able to show. Again, if you go down a little more there, Ryan, you see all the vaults LPs that we're in, but you can't see our entries and you can't see the ranges. And, you know, that is really important because it's a level of transparency, but they are still private vaults so that somebody else can't come in, you know, and basically copy what we're doing. So it is, you know, amazing product market fit overall.
Right. They can't, they don't know the secret sauce, because like AJ said, they don't know when we entered, when we exit, you know, what's there. And this guy's right here, like AJ said, this is what the wallet has for, like, we've got ETH on base, about almost 12 grand worth. We've got $8,200 in USDC. You cannot fake this because the wallet is doxed. Every single penny is accounted for. It shows how much in each asset we have, what vaults we're in. You know, we got some Sonic down here, got about $19,000 in these Sonic vaults. I mean, it does not get any more transparent. And this is what the space needs. This is what the space is looking for. And it's just a matter of time before the word gets out. Speaking of time, while we're talking about that, this TVL, and say what would happen, AJ, if everyone just quit buying bonds right now and it stayed at 1,369 bonds? Like, what happens? Like,
Yeah, brother. No, that's the other amazing part. Again, there's no token, there's no, inflation. That's all just real yield. So the cool part is that we're not reliant on new users. Again, a very telltale sign of a Ponzi is that when no new money comes in, the protocol fails. We are the exact opposite of that. We could stay at this 306,000 fund value, 1,300 bonds, and every single day we still collect our check from the LPs. So it goes both ways. I mean, obviously, we always want to increase TVL. The bigger TVL we do have, we are able to diversify even more, and ultimately, in the long run, we may even be able to make more money because we have a larger exposure to the upside with a larger TVL. But it's not like we're diluting each other. We're not farming a token. The old way of LP providing, you earned a inflationary token, and so the more TVL you had, the less you make because there's only so much of that token to give out for rewards. That was V2 liquidity. That's the old system. We don't do any of that, other than maybe Aerodrome with some added rewards with the Aero token. But everything we do is based on fees and volume. So the more TVL we get, that just means that we own a larger portion of that LP pool, which again ultimately gives us more control as we go as well. So.
Yes, exactly, and that's that's what's pretty crazy. And like, if no more bonds could be bought, we're still going to be okay, because I get that question all the time. I got a few DMs during the week. Well, Ryan, there's only about 20. We averaged about 26 bonds from your last per day from your last AMA. To me, 26 bonds is, I mean, that's what, $6,000. I mean, it's not like it's a few pennies or whatever. It's probably more than that. I can't even do the math in my head right now, but Rome wasn't built in a day, guys, and it doesn't need to be built here because there is zero Ponzi-nomics. We do not need fresh capital, like AJ said. Fresh capital would be nice because we can collateralize, we can keep more stables on hand for better entry and things like that, and that is super important. But it's not the end all be all, and that's what's important. There's zero Ponzi-nomics, like I said, and that's what people need to understand. And the transparency, the zero Ponzi-nomics, the co-founder is right in front of you guys every Tuesday night, right? Jake usually comes on once a month. We'll get him on at the end of the month here. And nobody else is doing this. Nobody else is doxing the wallets on DBank. They're not giving you the underlying asset. Maybe we should touch on that, AJ. When you go to redeem your bond, anytime you want, you can exit, ladies and gentlemen. Okay, you can redeem or sell your bond. There is a 10% tax for doing that, 10% penalty. That 10% doesn't go to me, doesn't go to AJ, doesn't go to Jake. It stays in the protocol, and that 10% continues to earn, so we get a slice of that piece of that 10% pie every month. So feel free to sell. Thank you for part of the 10%, and that's the way it is. I mean, I love that part, AJ.
Yeah, no doubt, Ryan. So that's another really cool feature that we have built in, and I'll go over a little bit more too on what you asked about the underlying assets. So you are minting a bond in actual Ethereum, and that Ethereum is then what we use to make the LPs. And the reason we do ETH is because 9 times out of 10 when you create an LP position, half of that position is Ethereum. So we have a lot more exposure to ETH. And then the second side is either, you know, Bitcoin or USDC or, you know, REI, Banker, SPX, any of these other tokens. Again, that some may say, alts, they're not really memes because they have a lot of utility and, you know, proven projects, proven founders, lots of liquidity. So we're not trading shit tokens. But we do have to take a little bit more risk in terms of alts because that's where the volume is. And again, the more volume, the way we're able to do, you know, APRs in the range that we are. So it is, you know, a calculated risk. And what happens is based on the mint price. So when we launched these Bernard bonds, they were about zero point 0.1 ETH each. And what affects that ratio, as you can see now, they're about zero point 0.9 ETH. That just means that the alts that we have in the overall LP are underperforming Ethereum just a little bit, and that's typical because you know, until there's a real alt cycle, alts can maybe underperform by a factor of, you know, 2 or so, but then they outperform when the market goes up by a factor of probably 3 or 4. So that is really bullish because we have a ton more upside potential. And when we do finally see a recovery, you know, even now, like ETH was, I think, 2,700 when we were minting bonds. So not only was ETH up, but it was also higher in dollar value as well. Now we're back around, you know, 2,600, and we're almost, you know, at mint price. So that is bullish. I think once we're back to, you know, 2,700 for ETH, you know, we should see it right there around, you know, zero point 0.1 and, you know, $250 respectively for the bond price. So just remember that, you know, as the market goes up and down, your principal balance goes up and down. But the cool thing is, again, you know, it's asymmetric upside. So when we do see everything go up in value, not only are you earning more in terms of your principal, just from your you know, principal increase, but now you're earning an APR on the new dollar value. So, you know, if bonds double in price, your APR is actually double than what is displayed because you bought the bonds at a discounted rate. So it's really another cool, you know, mechanic where, you know, if you take some of the fees that you're earning and buy more bonds while we're under, you know, mint price, you're essentially locking in your profit in a price appreciating asset, and the snowball effect can be massive. So again, you know, we encourage people to take profit and not compound to oblivion. But those that get it are compounding to oblivion because they know that they're getting more exposure at these lower levels, and that will lead to higher APR in the long run. And we this will be the bonds are something that we hope will go on forever. I mean, again, you know, a year from now, if we do get a bear market, maybe APR is now, you know, 50% instead of 100 or whatever. And people can make the decision whether to get in, you know, at that point. So the APR is always dynamic. And last but not least, what you said about exiting, you know, nobody is ever locked in to bonds either. So we ask for a 48-hour grace period, but in reality, it usually only takes about 12 hours. But you can redeem your bonds at any time. And so we just cash out any of our underperforming LPs, we liquidate that, and we pay you ETH right into your wallet again on redemption. So that's really cool. And there is a 10% fee, but like Ryan said, that doesn't go to us as the team. It actually stays in the overall fund. So now everybody else that still has bonds, they're earning on, you know, 10% more capital than they didn't even put in. So over the long run, that can be even more powerful because now you're earning on money, above and beyond what your principal balance was. So it really helps with the longevity of bonds on top. Yeah.
Right. Yeah, exactly. And you can go over here and you can look right on DBank, guys. This would be someone redeeming here, and these are just tests. Not one person has redeemed their bond yet, uh, which is pretty crazy, to be honest. Because usually that doesn't happen. Sometimes there's emergencies, and we get it. But it'll say burn right here, and these were just tests that Jake did when we first launched. So there has been no selling, and it's like I said, it's all tracked right in front of you. You can go and look at the portfolio. You can go under transactions and see what people have minted. I mean, it is all there for you to see, which is so crazy. Like they're 2 hours 20 minutes, someone minted a bond. They minted like 5. I mean, it's all there in front of you because the wallet is doxed. And I mean, not to talk bad about any of the big other, the competitors like PACA and Crystal and Beefy. I think they're good protocols, guys, but nothing is doxed. You're paying the underlying asset in while you're earning stables, but when you decide to exit, you're getting stables back while they gained money, while they made more money on top of the asset that you sent them by holding it. Right. So, I mean,
Yeah.
that's okay that they make money. I mean, like, what's the story? That kind of explains it, doesn't it, AJ?
Yeah, no doubt, Ryan. Again, I mean, to each of their own, and we're not here to talk trash about anybody. We're just simply providing a truly transparent version. And yeah, to Ryan's point, a lot of other protocols, again, another new one that is for sure a Ponzi I've seen going around is Bitnest. But the whole idea is they're actually making money on the price appreciation of the asset. So it goes into this, black box, and then who knows? They could be trading your money on leverage, on a exchange, and hoping that they get a 10x, and then that is what's used to pay out, the positions, and it's very dangerous because although that might work for a long time, when it doesn't work anymore, you get a 404 error and it disappears, and now you have zero money. I mean, there would never be a situation, and we saw. I used to joke about it. I can't really joke about it anymore. That World War III may happen, and the Bitcoin or crypto overall could go down, but there would never be a situation where you wake up and all the money is essentially gone because we don't see Bitcoin or ETH going to zero overnight. So again, we're fully diversified. You can see that in the DBank profile. If one of the tokens did rug, say whatever REI or any of the ones that we have, Giza, anything other than ETH, essentially, if it did rug overnight, which again is highly unlikely, that's only maybe at the most 10% of the overall portfolio. So we're really well protected, in that situation as well. So we mitigate risk as much as we can, and it's about a balance of capital preservation, but also being in tokens that produce enough fees to give us the APR we look for, and that we think will have a much higher upside. I mean, a lot of these, again, REI, Banker, SPX, we could see those easily do a 5 or 10x when Ethereum does a 2x. So it's an asymmetric upside.
Right. Yeah, exactly. And guys, I mean, you know, and I've said this before. What do you guys think BlackRock and State Street and Vanguard and all these huge hedge fund companies are putting their money into? Obviously, I mean, BlackRock owns 60% of the real estate in the United States. I mean, I have real estate, and like that's nuts to me. That one huge, I mean, it's trillions of dollars, guys. But they have they have a percentage of their portfolio that they put into something like this. Obviously not us or whatever, Bernard Bonds or DexFi or whatever, but this is what they're doing to make a stable, because they're paying out their investors, maybe 8% a year, maybe 7, yet, they're making millions and millions of dollars by
Totally.
doing this exact same thing, right?
Yeah, absolutely, Ryan. All the big dogs, especially now that, institutions are getting into crypto, again, the narrative right now, is crypto treasuries where, they're stockpiling Bitcoin and ETH and then, you know, borrowing against it. But in the background that, they're putting that capital to work as well. So a lot of big companies and private offices, they're doing LP provisions on their own. And, even that being said, we are like the 1% of the 1%. I mean, crypto is already very early. And, I think I read a statistic the other day that like only like 7% of the world is exposed to crypto, and stocks is like, upwards of 30 or 40%. So there's a major, major room for growth there. But even people that are into crypto, they think that just buying Bitcoin on Coinbase or Robinhood and holding it in their wallet, they think that's crypto. This is a whole separate, subculture of decentralized finance, where we are becoming the banks, we are becoming the financial infrastructure, and there is no middleman. So rather than paying for, a giant New York skyscraper with all these hedge funds and, Wall Street big bankers, all that money and all that yield goes to you, the participants. So that is really powerful, and that's what the ethos of DeFi is. And bonds is just the epitome of all that. So yeah, we're and we get our fees from the vaults. That's how we make our money. That's how we keep the lights on. There is a 70-30 split on what we're able to earn. Right now, a lot of that's going to the original users in the recovery fund. But over the long run, we may even be able to have more APR going to bondholders as we go. So, it's really powerful, and it's a beautiful system. I mean, again, we've learned a lot over the last 3 years, and bonds are kind of the culmination of everything we've done. That is the simplest form of LP providing you're ever going to have. So, yeah.
Right, exactly. Oh, we've got a couple questions here. When P&L and when top up? Oh, the P&L we talked about for the website, which is going to be probably right down here, I'm assuming is what they're talking about. I don't know what the
Yeah.
status on this, but could you explain what that's going to entail, AJ?
Yeah, absolutely. Great questions, guys and gals. So yeah, we are working on some UI updates. We're working on a PNL display. It'll show right there, like Ryan pointed to at the bottom of the screen. Um, it'll be a few different factors. It'll show you what you minted your bonds at. It'll show you both the dollar value and the ETH value. It'll show you the yield that you've earned, and this will all be specific to your own wallet. Again, the APR right now on the screen is based on, the overall entries. If you entered a little lower, your APR is actually a little bit higher. So again, keep that in mind. I know a lot of people are even using their own spreadsheets to keep track, but um, the P&L will show that in real time. So at the bottom, you'll be able to see it all. And if people want an example of that, Ryan, if you go to your own vaults that you've had set up, it's very similar to this. So yeah, go to any of the vaults that you're in, or actually go my
Okay.
positions. Yeah, any of those. There you go, and then those boxes right there. So at deposit, oh, a little lower, lower. Yep, right there. At deposit, now compounded, and then the P&L. Yeah, all three of those. So again, I won't say compounded because you have to compound on your own, but it'll have those metrics. So I'm hoping within another week or two. The reason it's not live yet right now is that we're actually bringing on 2 more white labels. So I can't disclose who it is at the moment, but it's 2 major protocols that a lot of you may at least have heard of. And why that is so cool is essentially it's all under the same umbrella. So the more white labels we do, the better and more TVL we get. And that's bullish even for Bernard bonds because it's not necessarily competition. All the splits are the same. All the LPs are pretty much the same. Um, if anything, Bernard bonds may still have a little higher APR, just because the timing of everything. But that being said, we should have upwards of $5 to $10 million in total TVL under bonds. And that means that everybody, again, in the recovery fund, is paid out much quicker. And then once that liability is gone, we can juice the rewards even more. So white labels are really important right now. And we have 2 big ones on the way. So that's why we had to push back some of the UI updates. So yeah, and what was the other question, Ryan? Or was that
The top up. I don't know if he's talking about maybe the next, like the 15th of the month would be the next time the
yes.
next bonds would be given out. If
Yep,
that's it.
exactly. Yep. So we do the again we do 2 top ups. One is weekly, and that is for the actual rewards that you get. Like Ryan said, I mean it's all variable, but there's a what we call a distribution contract that gets refilled every Friday. Again, it's in what we call epochs. So that's why you see APR go up a little bit on Thursday night and Friday day, because we refill the money. So again, and you can see all this in the DBank transactions, but we take 6 days of yield and then deposit it into the distribution contract on Fridays. So that happens once a week, and then the 15th of every month, we mint new bonds with the split from the original recovery program. So if you were in the private version of bonds before we took everything public, you get credit on the 15th.
Right. Yes. Perfect. And then remember, guys, when that happens, you need to log in, and you come down, log in with your wallet, and this little maybe I'm gonna request that when you guys do some UI updates that we go. Oh, did we lose AJ? Oh, there you go. Oh, he's back and forth here. Anyways, we'll wait for AJ to come back. I'm going to request that this balance, a lot of people don't see it when they log with their wallet, and the bonds are handed out, and your balance will show 1 or 4 or 5, how many ever you're owed. It'll show that, and then you either need to stake it or redeem it if you want to sell it. And pay the 10%. You want to do that, guys. But a lot of people. Let me get AJ back here.
Hey, I'm back. Sorry, Ryan. Can you hear me?
Yeah, I got you, AJ.
All right.
But yeah, that's what I was going to maybe request when you guys are, next time when you do some UI updates, I'd like to see this balance thing a little bit bigger because people don't see it when they log in.
Yeah, totally.
Like where is it? And I'm like, so when you see a balance, guys, you need to either stake it or unstake it and then redeem it. I mean, the choice is yours, but do one of them. Like at least get it earning, because you can unstake it anytime. But at least get it earning. I mean, I just had last week. I had 3 days ago. I had one person. Hey, did I ever get a bond? A month ago. I'm like, yeah, it's sitting. It hasn't been earning in a month. So I'm like, oh, so yeah, please totally do that.
Right. Yeah. So let me go over that really quick again. My apologies. It kicked me out for a minute, but I heard everything you were saying. So yeah, I mean, we can definitely make that balance more bold. If you click the stake button too, Ryan, it'll show up a little bit bigger. Again, that's how you know if you have one. And unfortunately, it's just the way that the smart contract works. There's no other way. We don't have access to your wallet, so we can't, stake it for you. If you mint an NFT, then you approve the transaction and it's staked automatically. So that is again, we do everything we can for you, but the bonds that you get from the original protocol, you do have to stake. And yeah, Ryan, again, if you don't stake, you don't earn the yield. So again, you have to. It is it's not a choice. So yeah,
Right.
if you want to earn, you have to stake. And then yeah, on unstaking again, the only reason to ever unstake is if you want to cash out. So in that case, you would just do unstake. Once you do that, they show up in your wallet, and then you go to redeem at the bottom of the page, and then you can submit to redeem those bonds. That's how you get your ETH out. So, and again, that's we say 48 hours, but it's usually about 24. And we're working on even instant withdrawals as well. So we're always upgrading and making things even more decentralized and based on the code itself. But yeah, great point, and yeah, we'll make that a little more obvious for the future for sure.
Right. Yeah. So I mean, yeah, just make sure, and I'll remind everybody on the 15th, guys. I'll make an announcement when the bonds are dropped and all that other good stuff. And then you can go in and log in with your wallet and stake or unstake or redeem, whatever you want to do. Just remember, please, there's a 10% tax. You're gonna lose 10% right off the hit. So maybe if you're planning on selling, maybe wait till ETH goes up, 20 or $30. So at least you're back to even, or that's why it will be nice when this UI is updated. You can see exactly what you paid in USDC and what it's worth now and stuff like that. That's going to be amazing. It's going to show you a percentage of what you're up on your whole portfolio, right?
Yeah, bro, totally. So again, that'll show. That's another thing because when we transfer the NFTs, again, the money, everything is fully collateralized. We're literally never not even able to mint an NFT without the money. But yeah, on the 15th, part of that fee split will go and buy new bonds and mint them, and then send them to your wallet. Again, if you were part of the original protocol, and then yeah, it doesn't show in the history because we're actually minting it. But yeah, the P&L that we're working on will show you everything. So yeah, you'll know how much profit you're in. And those bonds are minted at current market value anyway. So like you said, Ryan, as long as you either hold long enough for the yield to do 10%, or you hold long enough that ETH goes up, or the overall fund goes up by 10%, then you're not taking a hit at all. So
Right. Yeah. So just pay attention to that stuff. I don't want anybody losing money and stuff like this. And I was this total USDC distributed. Is that what has been dropped into wallets, or is that
yeah,
what has been like? What is that number?
yeah. So and I think that's about a week delayed as well. I know we're going on about 3 weeks, almost a month since Bernard Bonds launched. But yeah, that number is the total USDC that has been paid out to everybody, since we started tracking. So yeah, I mean, again, if you do the math backwards, about 300,000. Obviously, a few weeks ago it was only 150,000. So you have to, retroactively do it, but it works out to be, roughly whatever the APR is. That's a way to verify, what the APR really is, as well. But yeah, it's bullish. I mean, between what's been paid out to Bernard bonds and then, the Treasury bonds, we're almost at 100K of payouts, within the first month. I mean, it's insane. So.
Right. Yeah. And I did the math earlier today because I'm a math geek on my 4 bonds that I hold since I bought on day one, guys, just because I want it for content. I have made 9.6% in the APR would have been 9.6 30 days, in 30 days. So, I mean, and we're coming up on 30 days here in about 3 or 4 days. So it's going to be really close. And I'll do a video on it. We'll do the real math right on the video to show you guys that this APR is, it's facts. It's not some made up number that's just a bunch of garbage. Like, that's real yield going into your wallet, every day. And, just realize that that's happening. You're getting USDC every day. Plus, when the bull run comes here, and I think there's $7,000 to $8,000 Ethereum, coming in the next 8 months or whatever. Your bond could be worth, 600, 700, $800, and all of a sudden you're like, everyone's going to try to, time the top, and that's going to fail, because I've tried to do it so many times and failed miserably. But I mean, I've been through a couple cycles myself, and it always fail. I fail every time. But you know what? You could dollar cost sell too. Like I always talk about dollar cost averaging. Like last week it was $218, I think, for a bond. Now it's $223. Slowly growing up because the fund is doing better. ETH is on the rise and things of that nature. And so just remember, you're gaining on the underlying asset too, guys. Plus, you're getting stables in your wallet every day that you can claim at any time, fee-free. There's no 10% penalty on claiming USDC. It's free, just the less than 1 cent gas to do it. So I mean, just keep that in mind when you're thinking, oh, the USDC is, it's not. I'm only getting about 8% or whatever a month, and I think 8% a month's amazing. So, and speaking of that, AJ. What happens to this when the bear comes? Like what I think this is an odd cycle, and I don't think there'll ever be another cycle like we've seen the last 3 or 4. But what are where does this go when the bear hits?
Yeah, absolutely, Ryan. So again, this is probably APR and bear market are probably the two biggest questions we get all the time. So, number one, what you mentioned, and I can't wait for that video that outlines it, at the end of the month. APR is very difficult because, it's annual percentage return, not daily. And so because everything is variable, it is kind of hard to get an average, especially with only 1 month of data. But we like to under promise and over deliver. So the fact that we're even getting close to the displayed APR is really bullish. And in the example that you gave, Ryan, I personally believe that we definitely have a $8,000 to $10,000 Ethereum on the table. That would, even at the bare minimum, not including the asymmetric upside of alts that we're exposed to, but just the value of ETH alone, 3x's. That means that APR would essentially 3x if you're minting today, and that is almost a 1% a day real yield. I mean, that is a unicorn in the space for sure. And when that happens, then you're making enough in yield that you can withstand a bear market. And I also agree with you. Like, I think what we're going to see is an extended cycle where we still have dips, but we never have a crypto winter like we're used to, where, everybody goes away, everything dries up, all the volume is gone. I really don't think we're going to ever see that again. But even if we did, then all you would have to do is hold through until the next cycle. Again, it's nearly impossible to time the top. But if you were just holding Ethereum or Bitcoin in your wallet and you didn't sell at the top anyway, you still have the same downside risk, but you'd be earning yield the entire time. So when you put it in perspective, there's literally zero reasons why you wouldn't want to have your money in bonds rather than just holding in Bitcoin in terms of yield. I mean, obviously not financial advice, and everybody should have their long-term hodl bags of Bitcoin and everything else. But the yield is what matters here. And yeah, I mean, people, I love the idea of dollar cost averaging out as well. So like you said, when your bonds double, sell 10%, or whatever you need to do. And then when we see the dip, now you have capital to go back in, to bonds. So again, it really is up to you and what your risk profile is. But over the long run, even if you held, from today through a bear market into the next bull run, you'd be earning APR, even if it's 30% APR. That's way better than having it in your bank account, like you had said earlier, Ryan. So,
Right.
and we can also alter the composition of the fund. So, when we do feel like we're getting towards a top, we'll move more into blue chips and even stable farming, just farming stable tokens where we have zero risk, again, relatively speaking. And the APR goes down, but at least you're not losing the value that you've earned. So yeah, there's many ways to navigate the bear market.
Right, exactly. And Gravy says you guys should display the APR 365 to display your daily. I mean, a person could. The goal is Gravy zero or 0.3% to 0.4% a day.
Yeah.
If you put that up there, it almost, I don't know, because people are going to see 3 to 4 instead of 0.3 to 4, and then it looks like a Ponzi. And I mean, I can do the math in my head. 0.3% a day is 11%, about 10, yeah, almost. Well, it's about 9% a month. Yeah, 9% a month would be 0.3%. So anywhere from 0.3 to 0.4. That's the goal. That's the target, right? So I mean, you can always figure it like that. So 88.7. You take that divided by 30, you're going to get your daily. Daily is not important to me. Monthly is important to me, and yearly, because I'm in it for the long game. And if you guys aren't in it for the long game, maybe this isn't for you. If it was me, stay in for at least 3 months if you're going to try it. Because first of all, you want to get your 10% back. That if you were decide to redeem, like if you're in for 30 days, you're not going to make any money. Okay, you're going to pretty much break even because you're going to lose 10% when you exit. Okay, if you're in 2 months, you're going to be okay. But there's always something, and I get it, right? I used to be one of those guys. There's always something, the shiniest new thing comes out, 1.5% a day, 2.5% a day, and we all know what happens to that stuff because it's total garbage. It's not real yield. It's not transparent. There's nothing on DBank. The owner's not in front of you on camera. I mean, those times are past, guys. We need to get it into our heads that we're in it for the long haul. We're in it for the long game, and transparency and the team is what it's all about. I mean, in my opinion.
Yeah, Brian, I appreciate that sentiment, man. And again, I echo for sure. We've been there. I mean, as a lot of you know, I was a heavy investor in Bruno X. I mean, we all have our inner degen, and as long as you understand what you're getting into, it's okay to speculate. But this is a whole different ball game. I mean, I've talked about my personal story a few times now, but this is how I have been able to make a living out of crypto, and that is getting involved in projects that have real yield and utilizing the yield to then speculate. So, if you're using what you're earning to try to, speculate, that is a lot safer than putting your life savings into a meme and hoping it goes up. So, there's a lot of ways to actually utilize bonds to be a better crypto investor overall. And that's why we come on every Tuesday and talk about it. So again, nothing is financial advice, but this is the win-win strategy of having exposure to crypto overall and getting the daily yield or monthly or yearly that we all dream about. I mean, to Ryan's point, yeah, I mean, I think P&L will really help put it in perspective for everybody. when you start putting 0.3, 0.5% daily, sometimes people think that's too good to be true. And it can be a turnoff as well. So we want to make sure that we throttle everybody's expectations. Um, and as this matures, a year, 2 years, 3 years from now, we can go back and say, this is the average APR over the last 3 years, bear or bull market, was 100%. I mean, we could be at 10 million in no time. So I know there's a lot of interest, and honestly, the amount of growth that we have had in the last 4 weeks has blown away what I thought we would have. So again, we're in an amazing spot, and the bull run hasn't even really kicked off yet. So we're all building our positions now, which will even help further. So yeah, I couldn't be more excited, Ryan. I know we try not to get too hyped up, but I've been high on my own supply for a long time now, and yeah, I mean I'm excited that people are finally able to see what we have built. The vaults are so powerful, but nobody really knew how to use them, and so with bonds, we're making it accessible to everybody for sure.
Yeah, exactly. And that's what I mean. That's what I love. And Gravy's got it right. Been burned in the Ponzi. This is not, which is the most attractive part. Exposure to ETH and yield is magical. I mean, you can't say it better than that, because you're getting it both ways, like we said. I mean, it's crazy, and I'm still, I'm so glad. When this came out, when we talked about this for months and months, I was so excited to get started on it, because I knew, and bringing this out, I knew because of the team, the transparency, and how everything is on DBank and tracked, and the security measures put into place, and everything. It's so important when people realize that. I think the floodgates open, and people are gonna be like, "Hey, this is the real deal." They've got the tech, they've got the team, they've got the knowledge, and I mean, we're early, guys. I mean, we are early, like AJ said, in crypto, and we're early in Bernard bonds, and we're early in DexFi. These guys have been making money in DexFi for 3 years. This just didn't start 3 months ago. Like, they've been paying for expenses for protocols for 3.5 years. I've been with AJ for 4 years, back in the EMP days, Detonator, NFTs, everything.
Totally.
Never rugged, always adapt, always pivoted. They don't give up, and that's what I appreciate, and that's the kind of people I want to surround myself with. Because my dad always told me when I was young, if you're the smartest person in the room, you're in the wrong room. That holds true to this day. I think about that all the time. I want to surround myself with people who are honest, who people are smarter than me, because I'm not that smart. Everybody knows that, and this is the type of people that we need, and that we can, because you can get a hold of AJ in the DMs anytime. You can get a hold of me for questions as well. I mean, we're always here, and we're here every Tuesday as well, taking live questions. I mean, it's awesome. It's magical, is right, Gravy. You are right.
Yeah, no doubt. Gravy said it perfectly. And yeah, Ryan, I mean, we don't have a big head. We're always learning. We're always adding new features. I do this full time with Jake. We live, eat, and breathe crypto. Like I said, between both of us, we have over 20 years of experience. I've been full time crypto for about 8 years, but I've been in crypto for about 11. And again, man, you and I go way back, and this is everything that we wanted it to be, and nobody did it, so we had to build it ourselves, and here we are, man. So yeah, I think that again, it's the pinnacle of everything we've done, and I know we're coming up on an hour, but there was one question I saw, Ryan, from our good friend Scott. He asked about the
Oh
Zealot
yeah.
audit. Yeah, so we literally about an hour before I got on stream with Ryan here. I don't know if you want to pull up Telegram, Ryan, but we did an announcement in the Telegram chat for DexFi, and we have a full Zelic report. Our audit came back for Zelic. Yeah, right there. There you go. Right, perfect. So if you guys want to join that, or Ryan can post the link in the groups. But again, for those that were asking, we did a full overhaul on our audits. Again, we have 4 audits from all the big companies, Hacken, Halborn, Certic, all of them. And now we've done another audit. We spent like 300 grand on audits. So, and again, that 300 grand is from the yield of the vaults over the last 3 years. We don't sell, our own token. We don't dump on the community. We pay for development and, products out of the yield, which is another amazing thing. Improves how sustainable bonds are over the long run. But yeah, Zelic is a very unique style of audit where they actually try to hack your protocol. So it's what we call an offensive audit. And we had a preliminary report that we released just before we opened bonds to the public. Again, we would never open anything without being 100% comfortable. And now we have phase 2 of that audit that is now available to review, and everything is rock solid. So again, don't take my word for it. Go and read the audit. But so again, we're always on the cutting edge of safety as well. So
Yeah, and I'll post that in all my groups when we get off here because it's very important. I read through it already before the thing, and safety is number one. We don't need any hacks. We don't need any drained wallets. We don't need any of this and that. And a lot of our stuff are in private vaults anyway, like AJ said before that. But with that said, it's been a little bit over an hour, AJ. I want to look at one thing because I'm super excited. I think we might have got rid of all the Jeets.
yes, brother.
Up for the right for GG. Pretty excited about that.
Yeah, no doubt. So for those that don't know, this is our gaming project. Again, I had some of my most success in all of crypto with a game called Splinterlands. I did a true 100x on that ecosystem, and we have spent the last year building our own trading card game. So yeah, I know Ryan has covered it many, many times. I know a lot of you are invested. We have a AAA studio out of Thailand that's been building this, and we just released our actual gameplay trailer that shows actual gameplay footage. It's not AI. It's not made up. We're actually building this. We've spent more on this game than our entire market cap of the token. And yeah, Ryan, look at that. Higher highs, bro. We're and higher lows. We're looking really good. I think you're right. I think we may have hit a floor. And so again, if any of you, we were doing an OTC deal. We're pretty much out of tokens now. If you are looking to get a bigger bag, shoot me a DM. But right now it's best to buy on DexSwap, which is our own exchange on BNB, or Swap X, which is our Sonic Dex. So partner. So yeah, looking really promising, and we should have our pack sale sometime in September, and the playable alpha right around Halloween. So again, with the Halloween theme of the game.
Yeah, that's perfect. And so last week, I think Wednesday or Thursday, guys, I did a video just on Honor versus Baddest. I showed my bag. All the links are in the description to go. Tells you how to buy a GG if you want to get in something like this on the ground floor at rock bottom prices. And I'm not scared of showing my bag. I got a massive bag into this thing. I got 3 million tokens. This is my other account here. I've got a couple wallets, guys. So, and one's maxed out and this one's halfway maxed out. So I think in total, I've got 10 million tokens right now or something like that. It's crazy, but I'm just excited when this thing hits a cent. I mean, I'm going to be ecstatic for 1 penny is going to be an insane amount of money, but I think it's going to get there because please go watch the video, guys. Click the links, follow. They do AMAs every Thursday evening at 7 or 7:30 Central Standard Time. I'll post those in my groups too, guys. Just look at it. There's no pressure. I'm excited about it because you know, Gods Unchained started somewhere, Splinterland started somewhere, and I think with the team they have here and the team building it, they've done, you know, work for Disney, Pixar, Netflix. I mean, it's serious business. Like a company with 250 employees. It's no joke. It's serious business. And I'm not a gamer. Maybe I'll become one now. Who knows? But I'm excited about it. And I just want to touch base on that because I think it's a rare opportunity to be in this early at these prices. And I want to, you know, see it take off, and hopefully we can get there.
Yeah, thank you, Ryan. I appreciate you highlighting it, man. And yeah, this is our baby. We you know, again, and it's revenue for EMP. Again, part of the proceeds once we start actually having the game generate revenue, that will go to support the GG token. And you know, obviously, again, part of that overflows into our other ecosystem. So yeah, again, I think not financial advice, but this is a huge undervalued opportunity for sure.
Right. All right, guys. With that said, thank you everyone for joining. Thank you, AJ, for putting up with my crap for another hour on a Tuesday night and taking the time for us and answering questions and that stuff. Hit me up in the DMs, guys, if you have any questions. I'll answer them. If I don't know the answer, I will get them, and we'll go from there. It's back to the grind. Holidays are over. I'm ready. I'm excited. I'm pumped. Bernard Bonds is killing it. You know, 7.5%, 8% right now a month. That's no joke, and it's real yield. 100% transparent. Everything's on DBank, Ducks team. You can't ask for much better. With that said, ladies and gentlemen, I hope everybody has a great rest of their Tuesday, and we'll see you in the next one.